Hello friends, welcome to my YouTube channel. I am CA Renu Srikanth Tantry. I've been teaching accountancy for last 4 years. Through this YouTube channel, I want to make learning accountancy easier. I will be posting short concept videos and will also be posting videos solving questions. These videos will be useful to all commerce students, irrespective of whether they are in 11th, 12th or even CA foundation students, so that they can get clarity on the basic concepts. This is my first video, and so I'm starting with the topic of understanding the terms accounting and accountancy. Now basically, accounting is the language of the business. Like, we all need a language to communicate with one another. Like right now, I'm using English to communicate with you all. Same way, for a business which is carrying on so many activities, it also has to communicate how the activities have taken place in a business. For that, the medium that is used, the language which is used is called as accounting. Now, without going into the definition, we'll just understand the entire term accounting, what it involves. Now, accounting is basically a process. It is a process. It is not just a single step. It involves several steps. For the accounting to be done, the first step that we have is the identification of transactions and events. Now, I'm going to create a separate video on understanding the term transaction and events in detail. But right now, first step in accounting process that we need to understand is identification of the transaction and events. Now for understanding this, let us take an example. Say Mr. Sharma. He has 5 lakh rupees in his hand. He wants to start a stationery shop where he is going to buy the stationeries from the wholesaler, and he would be keeping it in his retail shop and he will be selling it to customers like you and me who need stationery. So he has started his business by investing 5 lakh rupees, and then he spends probably on furnishing that shop to the extent of say rupees 50,000, and he purchases items worth say 1 lakh rupees, which he would keep it in the stationery shop, which he would add the profit margin and sell it to customers. So that is his business. Now in this way, he will have several transactions taking place in a single day. Like he'll be purchasing items, then he'll be selling the several items to individual customers. So there will be sales of the items at different point of time in the day, and it goes on for several days. And within a period of 12 months, there will be so many transactions related to purchase, sales, and probably he will be also incurring several expenses. Like he might have to travel to purchase the items. He might have to employ certain salesmen to stand in the shop and sell the items which is there in his shop in his absence, or to assist him when there are more customers. So like that, several expenses would be incurred by him. We'll take an example of, say, he has a childhood friend, Mr. Verma, who is a very loyal friend and who is in need of some work. So Mr. Sharma has Mr. Verma as an employee, and they are doing the business together, but Verma is an employee of the business. Now out of these transactions that I have highlighted here, these activities that they have taken place in the business, we need to identify the transactions which are having financial character. Those transactions which have money value to it, which can be measured in terms of money, which would have a financial impact. Those transactions are going to be identified. And that way, in the form of these bills and invoices that we get when we purchase item, that gives us the details about the money being spent. The same time, when the goods are sold to the customer, receipts are or cash memos are generated, and those are evidences which are going to be generated. That will help us in identify the transactions which are to be recorded. So the first step that is involved in accounting is identifying of all these transactions which would all these actions or activities which would qualify as transaction which are to be recorded in the books. The second step, after having identified those transactions, we need to measure those transactions. Measuring here is in terms of money. What is the money value of the transaction? Like Mr. Sharma has spent on furnishing that shop to the extent of 50,000. That is in terms of rupees. He purchased items to be kept in his shop for worth 1 lakh. So that is also in money terms. So after having identified these transactions as transactions to be recorded, we should measure those transactions in terms of money. After having measured and we have the value of those transactions, next comes the third stage of accounting process, that is recording. In this stage, we are going to be actually writing down those transactions in the books of accounts. And that books of accounts that is being maintained by Mr. Sharma, where the recording starts, is called as journal. Basically, it is also called as the book of original entry, because this is the first time where the transaction which has been identified and measured are going to get recorded. And they are going to be recorded in the form of journals. So those who already know about passing journal, they will be able to better understand this. Otherwise, you can understand that it is the first time that the transactions which have been identified, which have been measured, are getting recorded in the books of accounts of the business. After having recorded that, now we will be recording in the journal, or which is also called as book of original entry, in date-wise order. So, date-wise, as a transaction takes place, the transactions would be recorded in this book. It is also called as chronological order. But if you see, you are recording date-wise all these transactions. But if you want to know how much has been purchased during an entire month or during a 12-month period, the transactions are going to be spread over different pages of the journal. If you want to know how much was paid to the employee in the form of salary, it would be also spread over 12 different pages, because there are 12 months in a year, in 12 different pages of the journal. So the information would not be readily available. So for this purpose, the next step in accounting is classifying. This is the stage where ledger accounts are going to be opened, where for each of the individual transactions, there will be accounts opened. Like for purchases, there will be several accounts opened, like purchase account, sales account, expenses account, and even expenses, the individual expense account like salary being paid. So salary account, if the shop has been taken on rent, then there will be rent account, and other expenses which are incurred like traveling expenses account. So individual accounts are going to be opened, and the transactions which have been recorded in the journal are going to get posted into these ledger accounts, so that all transactions related to purchase which are spread over several pages of journal are going to go into one single page of the ledger. So that at any point of time, if we want to know the total of the purchase or total of the salary paid or total of any particular specific account, we will be able to get it instantly. So this is the fourth stage of accounting. The fifth step of accounting is called as summarizing. Whatever has been written in the books of accounts in the journal has got posted into the individual accounts called as ledger. Now, once the ledger accounts have been created and the entries have been posted into it, we balance those accounts and get the closing balances of those ledger accounts. And that closing balances that we get, we use to prepare what is called as trial balance. So this is a stage of summarizing where we summarize the accounts which is created in the ledger book into a statement which is called as trial balance, which would be the form of a statement showing the ledger accounts, their account heads and their respective debit or credit balances. And using this trial balance, the financial statements of the business can be prepared. Now, when we're talking about financial statements, here we're referring to the profit and loss account and the balance sheet. Profit and loss account is an account which is prepared using the trial balance to find out the financial performance of the business, that whether it has earned profit or the business has incurred a loss during that accounting period. Because Mr. Sharma would like to know that on the basis of the transaction he has carried out and with the books of accounts maintained, only when the financial statements are prepared that he would be able to know the real outcome of carrying on the activity for that accounting period. So this is the fifth stage of accounting where we summarize those transactions into understandable format called as financial statements. Once these financial statements are available, we go to the sixth stage, that is interpretation. So this is a stage of analysis and interpretation. Now this is a stage where we are making the information which is available in the form of financial statements more meaningful. It will help in the decision making process. Basically, why do we need these information related to the business? Mr. Sharma needs it so that he can take several decisions related to the business. Like he has invested his 5 lakh rupees that he has and he has carried on the activities for first 12 months. And now at the end of the year, he wants to know what is the result of the operations, whether it is a good choice that he has made to invest his 5 lakh in this business, whether he should remain invested in this business, whether he should expand his business because if it is profitable, then it is better to even further go for expansion. Or if it is not a profitable activity for him, then he might also require information so that he can take the decision to shut down the business and move on to alternative business. So for all these purposes, this is the stage of accounting where the interpretation of the data which is made available in the financial statements would be useful. It will help in taking decisions. It will be helpful in making plans. So it helps in planning as well. And final stage that we have of accounting is communication. The information that has been generated through this process of accounting by following these steps of accounting is required to be communicated to whom we call as the users of financial information. There are several users of financial information. Like one of the user here, the main user is Mr. Sharma, who has invested 5 lakh rupees and is carrying on the activity throughout the year. He wants that information. The information which is available should be available on a timely basis. It should be reliable, relevant to the user. So that is what is required, which the accounting seeks to do by this seventh step of communication, so that Mr. Sharma can take appropriate decision. There are several users. One of them, as I told you, is Mr. Sharma. Whereas there are other users like Mr. Verma is also an user. An employee of the business also wants to know how the business is performing so that he knows whether he will get bonus this year, whether he can stick on to this business, whether there is any opportunity for growth for him in this business, or whether the business is going to get shut down, then he will have to start looking for alternative employment. So like that, Mr. Verma, an employee, is also an user of accounting information. So these are the 7 steps of accounting process, and when these 7 steps are followed, we say that accounting has been done. Okay, so I hope it is clear now. Now moving on to the second term of discussion for today is accountancy. What do you mean by the term accountancy? They seem to be same, accounting, accountancy. But no, they are not. Accounting is a process. It involves several steps. Physically, those steps are going to be followed so that the record of the transaction takes place, they get classified, and the information is available which can be utilized by the users. But accountancy in itself is a systematic knowledge of accounting. What is it? It is systematic knowledge of accounting. So having a systematic knowledge of accounting is accountancy. So accounting is a process which involves steps that systematically how it is done, that knowledge we call as accountancy. It helps us by telling us how to deal with several aspects of accounting. So what is the first step? As we know, just now we have learned that it is identification of transaction, which is the first. And then we follow it up with measuring, recording. So how it is to be done, in what manner, and each of the steps, how it is going to be done, that body of knowledge which comprises all that is called as accountancy. So in short, we can call it as theory and practice of accounting is called as accountancy. It tells us how to maintain books of accounts. So this is accountancy. Alright friends, hope this session has been helpful to you. If it was, please do like, share and subscribe to my channel. And please don't forget to press the bell button to get notifications of the new videos I would be uploading on regular basis. Thank you and have a great day. Stay home and stay safe.